everyone, this is the video for the Sozmali free group, and I have been promising it for a while. I've also been in contact with some of you who are members in here to actually get an idea of where you are and the things that are still bothering you, things that are still giving you trouble when trying to learn this. So this video is supposed to sum it up. Originally, I was going to make it into separate videos, but I realized it would actually be a better format if we just compiled it all into one video so everyone could benefit, because some of you have problems which are actually the same. So let's get into it. Okay, so before we get into anything else, I'd like to begin with a rehash of my favorite 3-time frame combination, right? Now everyone will have their own specific 3-time combination that they like following. However, this is my specific one, and actually you should know that it is essential that you have one specific set of setups that you like to see, right? And you can focus on those setups to a point where you can actually improve your efficiency in trading them, which is what actually gets into building up your edge, building up your own specific edge, which you calculate, which you redefine based on those specific principles. So rather than trying to actually be a jack of all trades within the strategy, you actually hone in. You actually hone in to what you're the best at. So I just like to show you my personal favorites. Okay, so right now we're looking at the RUSD and we're on the 4-hour time frame, right? So immediately, if we're looking within, let me just draw here real quick. If we're looking within this area, we can already see a lot of the specific muscles signals that we look for. Now, what I'm particularly interested in here is the fact that we had an extreme down here, right? But then did not give us an MLV setup. So we would have waited for a CSD, the cross of the 5MA and the middle Bollinger Band. So we had that here, but we also had thrown in for us the 50 EMA, which only makes it even more solid. So then we had a weak retest here, which could have been a valid entry. However, it did not really give us a confirmation in our direction until up here, right? So it would have been better to wait for this, where you not only have the CSD retest bouncing on your 5MA, but you also have it rejecting the 50 EMA at the same time. So then we move down onto H1. Now on the H1, we have our beloved 50 EMA reject, which is what I always like most of the time show to you guys when I'm doing 3-time frame analysis, because this is my favorite sort of setup to show up on the H1 time frame. So we have it here in clear full force. We're still looking at the same thing, and to realize that even though on H4 we didn't have a full MLV setup, over here it becomes even more defined. So keep that in mind as you're scaling down, right? So that's for the H1. Then we move down on to the M15. Wait, let me just move this a bit. Down here we have our extreme, a really defined extreme. Came back for MTP, and then it finished it off with an MLV. Not really reaching back up to here, but anyone I think would agree this is like a really good MLV setup. So you'd have your entry, have another powerful CSD retest. Here it's like corresponding with the one on the H4 where we had the 50 EMA thrown in. So we take our entry here, right? And then the rest is history, right? Now in these previous setups, in this previous setup that I just showed you, you notice that it actually focused on re-entry, right? And that's for a very specific reason. It's because the CSD re-entry to me is the most powerful and safest signal there is, because like I've mentioned a billion times before, trading extreme can be actually quite hard. I like to leave it for the more advanced people. So CSD and understanding how it works can actually assist you as you get more advanced to be able to trade those extreme setups and to be able to catch up on missed MLV setups, right? So I just want to get into the power of the CSD a bit, because some of you even had doubts about this, right? So you see now, just like I mentioned, right, how I like to reserve extremes for the more advanced, so we leave that. Trading extremes can be really easy, you just need to be smart about it, people who are good enough, and if you actually link up all of your analysis all the way up to the highest time frames, daily, weekly, monthly, you can even become confident that once you zoom down to the level of the M15, it becomes superbly easy for you to simply take it on the first confirming candle. But this is when you mix in other factors and things such as like the use of levels in price action, where you can understand the bigger picture. So you know that by taking this extreme trade, it's actually really safe. You're in a really secure position, rather than only looking at it from the 3 time frame analysis. You get to go even deeper. So that's why I say this here provides a safe entry. Or even if you don't do a lot of analysis, you know that by the time all of this here has occurred, you didn't get in, but because all of this here has happened, it now gives you the opportunity for the CSD retest, where only a few pips away, you get another opportunity to actually benefit from this extreme setup. So CSDs are not only powerful, but they provide for a really good safe entry, whether you're advanced or whether you're a beginner. So it's like I like for us to go through some points, right, which I think are like important to note about re-entry setups, right? So first of all, just note that the CSD is the most powerful, right? Excuse my horrible drawing, right? I'm using a mouse. So anyway, like CSD is the most powerful entry. Like I've mentioned before, I can sing this all day. Like, do not underestimate CSDs. The only problem about CSM, which I've noted here, is the fact that you will have your first CSM, right? And already it's much less probability than the first CSD that you took, right? So by taking CSM, you are taking it with less probability, but you simply take it with confidence because you know that the higher signals actually confirmed it. All of this here, along with the CSD itself, confirms the larger direction, which is what gives you the confidence to trade the CSM, right? But it's only wise to trade only one CSM, because the more CSMs that occur, the weaker they get, the more down you go. So that's why I wouldn't advise hopping too much and thinking that just because you've missed a really good move, you can now get on like the third or fourth CSM that's occurring there, unless of course you have really deep confirmation from the higher time frames. I would only advise using only one, right? Keep that in mind. Okay. So another note on CSD, right? On the entries, they are the best when they show up on the 3 time frames. If you can have a CSD setup where from the daily, the H4 and the H1, or the H4, H1 and then 15, and each time frame shows a CSD, let alone a CSD which is coming from an extreme or an MLV setup. If you can have that on all 3 time frames, that counts as a really, really, really high probability setup. So make sure to keep your eye on those. Now, as I've noted before, CSD makes for a really good entry confirmation, right? Whether it's MLV and you're not sure really whether the higher time frame is giving you the correct direction, so you wait it out and you enter over the fear, you can build your entire strategy by only trading CSD setups. So understand that it isn't something insignificant. You can build an entire system simply aiming out for CSDs as your entry signal. You know what I mean? To increase your probability based on whatever parameters that you choose to fixate to your own personal strategy. And along with that, it's like Fibonacci is a really good tool, right, for helping out with CSD re-entries. But then I don't use it as much because over time, by recording some data and actually analyzing it, I realized that it actually provides a really negligible improvement on my trade probability. So personally, I dropped it. However, I think it's something good for you as a new trader to look into as you're building your system. Now, someone once asked me if what happens if we have a CSD, but then the price reaches above where the original MLV setup was. And in all honesty, if it happens like this, right, these 3 spikes to the high, it doesn't matter, because at the end of the day, this candle only reached over there, but it ultimately closed below the level of MOV, the 5 EMA did not cross over the outer Bollinger Band. Because if the 5 EMA had crossed over the outer Bollinger Band, or the candlesticks themselves did so and went over, that would become a new extreme, just like this, which is the same reason why this MOV is still valid, because the 5 EMA or the candles did not cross over. So keep that in mind. So because this candle still closed over, they were likely just collecting some stops, which were bunched up here, people waiting for a continuation of the larger train, right? So they collected those stops and they took it down. That's what I mean. So just keep that in mind. If it did not close above, it's still valid. So this is not a third MLV or really count as that. It's a CSD retest. Just so happens it dug in a bit deeper, which arguably actually gives it more weight. Now, I also wanted to touch on this because I realized that as time has gone along, I've begun to realize that I've been working with a lot of people who are familiar with the market makers method, right, as their previous education, right? They've started with the market makers method, and so they've gotten to that way of looking at the charts. And as I teach them BBMA, they begin to realize that there are a lot of similarities between the setups that show up on the BBMA and the setups that they find in the market makers method. It's even gotten to a point where I would be trading using the BBMA. Someone else that I like to share analysis with is trading the MMA method, and we are finding the exact same setups even while using a different set of principles. And this is I personally believe, the fact that the chart moves in a specific way in terms of the waves that form, whether it's by big banks manipulating it, small traders, supply and demand stacking up over the millions of people trading all over the world, or whatever reason it may be. But the chart moves in that specific way, which makes it irrelevant, whether it's the banks or simple supply and demand that's influencing it. The really important thing to take away from it is the fact that the chart moves in a certain way, and because it moves in a certain way, I can predict said behavior and profit from it, right? So for example, I would make an example here, right? Like of some things that if we saw it on the market makers method, we would believe it to be actually a good setup, just as well as we would see on the BBMA, right? So for example, you'll notice that in the market makers method moves in a specific way. You have a range, a breakout, a double top, and then it goes to the opposite side, double tops, and ends it off, right? And if you look clearly, we can see a very similar setup here. Starting from here, we have our range chart moving up and down, right? Then we have our breakout creating an M formation. That's not really a valid MOV setup, but in the grander scheme of things, a really proper double top setup and a head and shoulders at the same time, excuse me, a head and shoulders. If you can see it here, I can't really write with a mouse, but you can see the grand picture over here. So we have that range, that breakout into the double top, then we have it move to the opposite side, form another double top before closing off in another range. So really it does look the same and it does work the same, but you just need to understand now in your trading that all you have to do is apply your principles. Don't get conflicted because now you're thinking about the set of principles taught to you regarding a certain strategy and the sort of principles taught to you regarding an opposing strategy. Instead, you must understand how to strategically use that knowledge you have, use your way of looking at the charts and analyzing to actually reap the most profit from this. So I could analyze this in a number of ways, but it isn't important which way I'm using, just so long as I'm building my edge, sticking to my principles, and refining them. So don't get conflicted on this. And the reason of people getting conflicted of this is why I've designed the advanced course to actually include price action, BBMA, and the market makers method within one grand system, which I call true strategy, to actually teach that. So just don't let this confuse you if there's anything you take from my rambling. Okay, so this was a recording of me earlier, just going through some charts. Now, this recording might be a bit off because I'm recording as the video goes, because I did not do the audio while I was analyzing, so I'm applying this afterwards. So I'm gonna try my best to keep up here, but it's just basically a little bit of how I want to show you how BBMA and price action comes together once you understand both sides clearly, right? So let's have a look at this. So basically, I'm having a look at the larger trend, right? Basically, what I see is on the higher time frame, on the monthly, we had a downtrend which failed, right? Retracing back up to this level, right? So now either here, this will keep with this level, continuing the now new uptrend, or it'll simply revert back to the downtrend by breaking out to the low here, right? Continuing the larger trend we see on the monthly time frame, right? Or another alternative is it could break up, now beginning the new trend as I've mentioned, right? So now this is the play I'm trying to make. So I've created here a drawing, right, with these lines to actually define a bearish bullish flag, whichever name you want to call it, a wedge, a consolidation which is slowly constricting, right? So I'm trying to actually wait wait it out to see which outcome comes so I can then trade it, right? So while that's happening on the weekly time frame, I'm also zooming in onto the lower time frames to see what actually unfolds, right? So that I can trade those minor moves within here while I wait for the larger moves, right? Okay, so let's have a look. So now I've zoomed into the daily time frame, right, from the weekly to actually hone in on this wedge right here, to hone in on this channel within that wedge. To actually, as I mentioned, I want to trade it within before it even breaks out, right? So that hopefully I can even catch the direction of the breakout before it occurs and just continue to ride it in that direction. So this is basically what I see here. Right now I'm angling for a sell because that's what the technicals show me, right? That's what the technicals show me. I would rather prefer it to break to the low, continuing the trend. If it does not continue the larger trend, it'll still be quite beneficial to actually get something out of this position specifically, right? So now that we've zoomed in onto the 1 hour time frame, you can actually see what I've been looking at here. Earlier on, we had an extreme MTP MLV setup which reached the opposite side bottom up band, which means it was a successful setup, right? But then it continued on with its trend of actually stagnating, moving sideways. So it's mostly been just floating around here in this channel, and it made a sort of a bit of a tiny breakout. And as soon as it makes this breakout here onto the opposite side Bollinger Band, we begin to see a familiar feature unfold in front of us. The feature I've mentioned many times, whereby when the Bollinger Bands are sideways, yet the chart is ranging in between them. These points out here count as setups as part of the 3 time frame analysis, depending on which direction you want to take. For example, if on the H4 you had a CSD retest to the high, and on the H1 you saw this, it would count as a valid setup for you moving downwards then to your entry time frame on the M15. So that's what we see over here, right? That same pattern, sideways moving Bollinger Bands, price ranging between them. So what I'm hoping for here is a downward move to these opposite side Bollinger Bands. Ultimately, I desire to reach this line over here that I've drawn here. However, I will be constantly analyzing as it goes to see what direction it's most likely to take, because even here we can still see that it's possible for this to merely be the CSD within the retest phase looking to go up. But even for that, I'm prepared. Even though I've taken a sell position there, I'm prepared for that with stop losses and analysis for how to react to such a move. So now we've zoomed into the lows close time frame that I like to go to M15, which serves as my entry time frame for my daily analysis, right? So we can still see those same features here. That MLV setup here looks quite different now, but that's to be expected, right? What's most interesting to me is this level here, which is now on its third touch, right? So we see here one candle out, one candle back in. A good signal. Usually I would take it by the second candle, right? In such a scenario. However, sticking in line with the principles of the BBMA, because I saw it as more beneficial here for allowing me a safe entry, I've waited for the CST setup. I waited for the CST setup, which fortunately also crossed the 50 EMA, just adding more credibility to the probability of it actually going down. So you can see a nice retest here in one small pin, one tiny pin, arguably the best kind, and I've loaded in some entries there, which is why I say I'm prepared for it to go down here, but I'm also prepared for it to hit my stops up here and set up for a long position. So that's where I'm currently at with it. And keep in mind, this is a trade from today, from earlier this morning. So even you can check into the charts USD JPY and have a look at what's the current state of affairs. I'll also be updating you in the group. And here's just a recap of my trading from the 4-hour. Then we move down to the 1-hour time frame. So actually have a look again. There we can see the lines have drawn up. And arguably the other positions I could have drawn up, but those I'm comfortable with. We move down again to the M15 to actually show again, what I predict and how I've set it up for myself. So I hope that this video has been helpful. I hope that I've answered all of your queries properly. And even though I've decided to put together all of those personal videos I wanted to make into something more summarized, more concise, I will actually also be producing, private single videos for you guys, as I've promised, just extra on top of that, because I think it'll go a long way, especially since now I've began to do one-on-one work, with you guys. So that's it for this video, and remember that the end of the week video is still coming, containing all of my analysis as I do it live on the charts, containing student convos, containing everything you can think of that has to do with my routine in terms of the work that I do with Sozmali is included in those videos, and they will go even much deeper than this here, right? So thank you for watching this. I appreciate it, and continue to give me queries for the next videos like this coming up.